Hello and welcome to another episode of the Oracle's Classroom. Today we're going to be taking a deeper dive into Berkshire Hathaway's third quarter 10Q, which was released about a week ago. So we're digging in here. So we're just going to start with the high-level overview of operating earnings and some of the key highlights in which Berkshire releases in a press release and summarizes things for shareholders, but points to the 10Q for more detail. So we'll start with this. So here we have the major components of Berkshire's operations. Insurance underwriting, we can see, swung to an after-tax loss in the third quarter, but was still positive year to date. Insurance income was down quite substantially, and we'll get into that. Railroads and utilities, which, not surprising, maintained their consistency given the types of businesses they're in. And then other businesses were down. So if you kind of take everything, sum up everything, including that other category, the operating earnings for Berkshire in the third quarter were down 32%. And year to date, they were off about 15%. So the other section here, a couple of key pieces of information for shareholders to understand. So during the third quarter, Berkshire purchased 9 billion of its own shares, which is the most it's ever repurchased. So year to date, that brings the total to 16 billion. Which we can see Berkshire used almost all of its operating earnings year to date to repurchase shares. So an indication that the stock market is not providing really any values for the types of companies that Berkshire needs to purchase. The other key piece of information that Berkshire provides here is float, which increased to 135 billion, which is a $6 billion increase since year-end 2019. And float's a liability, but it functions very much like equity because Berkshire has use of the money almost in perpetuity. It's very slow to decline if it does at all. And the insurance operations are continually writing new policies, which help to keep that essentially acting as a revolving fund. So here's the 10Q, and I've just jumped right to the common stock reconciliation page. So we can see as the year progressed, Berkshire increasingly repurchased its own shares. And during the first quarter, we can see about a 1.6 billion, which at the time I was hoping for a lot more given how far the share price dropped. But no doubt Buffett was looking at the extreme economic conditions, seeing what might possibly happen with the coronavirus pandemic and conserved cash. So only 1.6 billion. But then in Q2, 5 billion. And then in the third quarter, this 9.3 billion. So it's quite a significant ramp up in repurchases. So we can see this here on the statement of cash flows. And just again, to kind of highlight, I didn't highlight it here, but we can see with these two line items, I'm going to highlight this, the net change in equity securities. We take these two numbers here, the 28 billion of sales, 22 billion of purchases. So net, Berkshire has sold about 6 billion of equities year to date. Not a huge amount in relation to its balance sheet, but notable nonetheless. And I did want to touch on quickly here the balance sheet. So we can see just an incredible amount of value residing on Berkshire's balance sheet here. At the end of the quarter, Berkshire had about 142 billion in cash, and I'm excluding the cash from the railroad and utility, so just within the insurance and other segment, plus 19 billion in bonds, another 245 billion in equities, and then 17 billion in equity method investments, such as Kraft Heinz, Electrical Business, Pilot Flying J, and a couple of others. But within this 245 billion of equity securities, 70% are represented by just 4 companies. 112 billion of that is Apple, 25 billion Bank of America, 20 billion is Coke, and 15 billion is American Express. So an incredible degree of concentration, which over Berkshire's history, it has continued to maintain its levels of concentration, even as its balance sheet has swelled. So just incredible. So we'll just jump right back down here to the results of operations. So it's important to really dig in and understand exactly what's going on in each segment. So we see a little bit more detail here. We can see that Berkshire has split the railroad and utilities into their own columns. The manufacturing, service, and retailing are still together, but those will get broken out in more depth below. And this table is also includes the investment and derivatives gains, which Berkshire ignores for short-term purposes because they are so volatile, and they don't manage them at all. So we can jump in, and the financials do this, wonderfully. Just jump right into each segment, and so we can see, okay, here's this $291 million loss. Where did it come from? So we'll just quickly kind of go through here. Geico, it had this and has continued to have this give back program where it has given back and has given discounts to policyholders because of, the industry's doing it, so they sort of had to, but it also reflects the fact that people aren't driving. But within this, it's really interesting to note. So Geico in the third quarter and results are volatile, but you see this 3% underwriting profit. That's right about the sweet spot where Geico wants to be. But when you dig into the results here, it's really interesting to see the changes. And when you kind of look at this on a high level, losses just about the same from the year before. But when you see the degree to which frequencies and severities have changed over time, it's really just incredible. So frequencies in the first 9 months were lower to 29 to 31% range. So about a third less in number of claims. But on the flip side, the severities are increased, in also in double digits. So more people or fewer people are driving, but those that do are getting into more accidents is kind of the high level takeaway there. Now, the primary group, this group typically is very, very consistent profit generator for Berkshire. It does include a lot of these companies that write workers' comp insurance. They also had some pandemic-related losses related to these hurricanes. So it's still, these companies generate a very, very good amount of float. Probably around that $10 billion range. So, it's generating essentially break-even float this year, which is still a very good economic result. But we can see, the first 9 months of 2019, they had almost a $300 million profit. So I would not be surprised to see these bounce back very healthy. The reinsurance operations really is key to understand the float in Berkshire. So there's a couple of categories within the reinsurance. First of all, results are very volatile. Hurricanes, large risks, fires, you name it, Berkshire covers it. But then they also have retroactive policies and some other time value of money business, which they write, which we'll see. Even if they write no business, accounting charges create losses. So In the third quarter, property casualty wrote to almost $100 million gain. Life health was positive. This $394 million in retroactive and the $209 million in periodic payment annuity. Well, the retroactive is almost entirely due to accounting charges because Berkshire wrote no policies, basically no policies, 5 million during the third quarter. So that's essentially no volume. So most of this is just accounting charges and changes to reserve assumptions. Same with the periodic payment annuity. That's really a time value of money type of business. So Berkshire does break this down. It's worth reading. So even after the hurricane losses, that positive result was made, which is a very good result. So in this section, we can really get a handle on the float related to retroactive. So unpaid losses, almost 42 billion. Offsetting that are unamortized deferred charges of 13 billion. So, Berkshire has this incredible amount of float from these retroactive reinsurance policies, which will be on the books for a long time, but the float will be around for a long time. We'll just jump right down. So the investment income, that was down because of certain lower dividend payments, but also because of interest rate declines and that huge amount of cash that Berkshire holds on the balance sheet. So jumping into some of the non-insurance businesses, Burlington Northern Santa Fe, the railroad, it was penalized by the pandemic. It was able to keep operating because it was an essential business, but volumes were down quite a bit throughout most of the categories. But it still earned, 1.8 billion in the third quarter, and almost 5 billion pre-tax year to date, which is just again, the consistency of the railroad is just wonderful. The industrial products, I'll just highlight this. This is within the railroad. So from the operating revenues from industrial products, which is one of the four main categories of products, volumes declined 23% in the third quarter and about 17% in the first 9 months. So we'll see that reflected in some of the other businesses as we get in deeper here. The utilities businesses, just one thing to highlight, they are very consistent, but the significant wind and solar investments that Berkshire makes through the utility operations actually results in a net tax credit. So it causes after-tax earnings to be higher than pre-tax earnings, and those are very real. It's real cash that comes into Berkshire because it files on a consolidated basis. So Berkshire, maybe about 2 years ago, started including this chart, which breaks down each of the segments after tax, which is how they are managed and evaluated. And so it includes those tax credits, which makes sense because they're an economic benefit to Berkshire. So that's how their manager should be compensated. So just a couple of things here. Mid-American had its after-tax earnings jump. There were some tax credits that caused that. Real estate brokerage, so Berkshire Hathaway Home Services is doing really well. And, I guess most of the country probably sees the housing shortages and continued increase in prices. And Berkshire essentially gets a royalty on those that it does through those fees. So now we get into the MSR, the manufacturing, service, and retailing businesses, and these are made up of dozens and dozens. Actually, it'd probably be better to say over hundreds, because Marmon has quite a number of independently managed units of its own. So it's broken out into manufacturing and then service and retailing. But when we get into it, they also break down each section into subsection. So a little bit more detail. There's still a lot that's missing, or I wouldn't say missing, but consolidated over the years into these categories. So, the biggest one here that stands out is industrial products. And as we saw with the railroad, the industrial volumes are just down, an incredible amount. Precision cast parts is impacted quite acutely by the pandemic because it makes aircraft parts. So, we see a 41% decrease in the third quarter and down over 26% in the first 9 months. So it's just really getting hit hard. Its pre-tax earnings are down 80%. And if you read through the section here, Precision Cast Parts has restructured its business. It's basically done everything it needs to do to survive. It will be viable long term. It's an essential business long term, but it's going to be some very tough goings in the near term. Lubrizol, same thing with it had a fire in its France facility last year. That's coming back, but it makes industrial lubricants, and those are down as well. Marmon also down. IMC, which is ISCAR, but also a number of different businesses. The main businesses are based in Israel, but those continue to suffer. And then on the flip side, building products are doing better. So Clayton Homes, the home builder, both traditional stick-built as well as manufactured home builder, is doing really well, along with the housing boom that we're having here. Housing shortage is causing that company to really continue to do well. And even when you get deeper into this, so included in building products are companies like Acme Brick, Shar Carpet, MyTech, and those businesses continue to do well. Consumer products, those again sort of mixed across segments, but those businesses continue to do well. The service businesses, some of those service businesses are companies like Flight Safety and NetJets, which obviously were and have been impacted by the slowdown in air traffic. Flight Safety trains pilots, so that would naturally be lower. The retailers, you can really dig in. The biggest in this segment is Berkshire Hathaway Automotive, which was the Van Tile Group purchased a few years ago. So that kind of dominates this category. But we can see when we dig in home furnishings. So Berkshire has 4 home furnishings companies: Nebraska Furniture Mart, Jordan's Furniture, Star Furniture, and RC Willey. Increased revenues 8.5%. So the consumer continues to do well, but there continues to be these mixes between certain companies. So it's definitely not uniform when you get into the details here. And McLean, it's a food distributor of groceries and to restaurants. It has a big volume to Walmart, which was its corporate parent at one time. So it looks like its pre-tax earnings were up huge this year, but it had some certain one-time things that affected that. So McLean just kind of continues to bob along, and it's reported as a separate entity because its revenues are so huge. So just in that one quarter were $12 billion. So that the SEC requires that it is reported separately. So I think that's all I have here. Certainly there's a ton of detail I left out. The report is 55 pages long. Some of this can be skipped over. A lot of it is required to be in there. Some of it repeats itself. One really interesting thing, just to show you sort of where we are in time, is Berkshire has these $1 billion worth of euro notes at 0%. Just an incredible amount. And even though Berkshire has this huge cash pile of 142 billion, it still maintains these borrowings at the parent company. And it's done that over time. It's continued to borrow when borrowing makes sense, and it has the assets that it needs, or the liquidity it needs to make a huge acquisition when those come up. So things can change very quickly. So that's kind of it in a nutshell. Would love to hear your comments. Would love to have your feedback. Comments, questions, kind of keep the discussion going. Would love for you to recommend the channel, to like, subscribe. Certainly, if you've listened this far, you're a diehard. Really appreciate it. Send me an email. Love to send a comment in the comments section. Would love to chat. So thanks again for listening, and we'll see you next time.